Morning, folks. Quick update on natural gas. Let's talk about what's going on in the news. Natural gas news websites like Natural Gas Intel, Natural Gas World, and Oil and Gas 360 are useful resources to have a look. I'm just going to scan through the headlines very quickly. This always interests me about natural gas and the obsession with the weather. Yes, there's cold weather coming, so that's boosted the price a bit. We're going to have a look at the charts very shortly, and I'll tell you where I am in my positions and what I think the strategy going forward could be. You know, the weather gets hotter and gets colder, and these are long-term forecasts very often that might or might not pan out to be correct. And there's a note on here on Natural Gas Intel that long-range weather forecasts favor a cool start to April. Well, we're in the middle of March right now. It's the 14th of March, even though they say this is subject to changes far out because we're this far out. Colder than normal temperatures for the second half of March should shrink storage surplus for the 5-year average back to the 300 plus BCF mark, according to NatGAS weather, etc., etc. As far as the weather goes, I know that people pay a lot of attention to it, but the weather forecasts can change and can sometimes be wrong. If we look at Natural Gas World, we can just scan through the headlines, and these are from the 14th of March. Russia not informed on the progress of the Nord Stream blast probe, etc., etc. Equinor makes 8th oil gas find of the year, so a few more finds. ING toughens oil and gas policy to include trade finance. EU to revamp the power market, aiming to blunt price spikes. Okay, interesting. They're also talking about getting rid of gas by the year 2030 or something like that, to that effect. I'm being a little bit hyperbolic regarding that. And then US shale production set to rise. This is all news coming out today, to the highest since December 2019. So that's kind of bearish for gas prices, and then various other things on environmental stuff. So not a lot of news. Then there's a little bit of news. Some of this is slightly older news going back to March the 10th. Oil rig count has decreased, and then there's some news on the Freeport facility. This is going back about a week or so. Natural gas down 2% as flows drop to Freeport LNG plant in Texas, etc. So not a lot going on really. We've got some colder weather approaching. We've got the Freeport facility getting up to full production, a small reduction in number of rigs, but some more shale gas coming out of the US to the highest level in quite a long time, etc., etc. So not an awful lot to go on, a bit of a mixed bag really. I think the only thing is that we're getting some colder weather, and it's forecast to get colder in April, but we're a long way out from April right now. So having said all of that, let's have a look at the charts. So I've got the Henry Hub NYMEX chart on here. Let's have a look. I've got the weekly chart, and you can see we've rallied up a little bit. We're at $2.65. But looking at the weekly chart, you can see we're still within that critical range. I've got those two lines drawn up above us, and then I've got our target level drawn up here in pink. And we're still below the $3 level, and we're still below the $2.65 level, although we're pushing up against it right now. We have rallied up a little bit from the $2.40 level that we saw towards the end of last week. So what do we do with this? Let's have a look at the daily chart. The daily chart gives a little bit more detail. There you can see our target up there at $3.40 to 50 to 60 to 70 maybe. There's the $3 top that occurred on that pre-weekend gap, and there's the low that we reached yesterday at $2.40.39, and we're just pressing up against $2.64. So my strategy still remains in place. Remember, I'm long from $2.10, and I hedged short at $3, and I added a little bit of a hedge on at $2.57, my extra bit of short hedge, which puts me at 65.35 long to short. So if the price keeps on going up, I'm happy. Even though I've got 35% short, if we move down, I'll start to consider taking those shorts off. If we move up and break above $3, I'll be looking to add some additional long positions on in order to offset the short hedge that I've got. My target remains at $3.50-ish, and that's that range that we've been talking about for such a long time, where there are probably still an awful number of long positions being held, and you can see why that's an important level. It's the bottom of that dip in 2022 before we got that big rally and this thrashing around at those very high levels. And it's also that area of consolidation that occurred where people started buying before we collapsed through that support. Remember, we got a consolidation there for a number of days. It looked like we might hold, and then it broke through, back tested from underneath, and then collapsed down to the $2 level, which is where the price found some support. Actually, it was just below $2, about $1.97, if I remember correctly. So that's where we are today. And so my position remains exactly the same. We haven't really moved very far. We're still in the range. If I draw another line at the bottom, this price here around $2.40, you can see that little sort of mini micro range that we're still inside. And that's a range within a range within a range, really. So the bigger range is from $3.50 down to about $1.80. The tighter range is from $3 down to $2. That's the range that we've been in really since beginning of the year. So we've got this macro range, and we've got this mini range between $2 and $3, and we've got this micro range between $2.40 and $2.65. We're still in the middle of the middle, and there's really no action to be taken at this stage. If you're long, I think, as I am, holding for a target of $3.50 eventually, one day it'll get there, is the right idea. But remember, if the price does fall down through the bottom of this micro range at $2.40, we're probably heading back down towards $2, and then we'll have to start readjusting our hedged positions, adding some more shorts on if we go lower and start breaking down. Conversely, if we break higher and close above $3, I'll be trying to offset some of those shorts with additional long positions for a target of $3.50, where I will close everything and wait to see what happens. Hope you found that useful. Have a great day.